What if the most trusted institutions in society, the banks, profit from death? A disconcerting thought, isn't it? But it's a reality more common than you might believe. Many banks have found a way to turn the inevitable end of life into a revenue stream. They do this through a little-known practice called bank-owned life insurance, or BOLI for short. Now you might be thinking, a bank taking out life insurance? On who? The answer is their employees. Yes, you heard that right. They actually take out life insurance policies on their own employees. In the event of an unfortunate demise, the bank, not the employee's family, is the beneficiary. This means that when employees pass away, the bank gets a hefty payout. Sounds unsettling, doesn't it? Indeed, banks can make millions when their employees pass away. This is just one of the disquieting truths about banks that we'll be delving into. Stay tuned for more. How does bank-owned life insurance work, you might ask? Well, let's delve into the nuts and bolts of this peculiar banking practice. Banks purchase life insurance policies on their employees. Yes, you heard that right. The bank, not the employee's family, is the beneficiary of these policies. The bank pays the premiums, and upon the unfortunate event of the employee's death, the bank receives the insurance payout. This is the fundamental mechanism of bank-owned life insurance, or BOLI. Now, you're probably wondering, what's in it for the banks? The answer is twofold: profit and tax benefits. Let's start with the profit side of things. The death benefits that banks receive from these policies are significantly higher than the premiums they pay. The difference forms a substantial part of their profit. It's a morbid reality, but the death of an insured employee translates into a financial gain for the bank, and it doesn't stop there. The banks also enjoy a major tax advantage with BOLI. The cash value of these policies grows tax-deferred. In layman's terms, this means that banks don't have to pay taxes on the policy's cash value growth. And when the insured employee passes away, the death benefit payout the bank receives is tax-free. This tax advantage is a significant boon for banks. It allows them to grow their assets without the burden of tax liabilities. It's a win-win for the banks, but the same can't be said for the insured employees and their families. The BOLI system is a complex web of financial mechanics, but it essentially boils down to this: banks leveraging the inevitability of death to bolster their bottom line. It's a grim reality, but it's the truth of how banks manage to turn a profit from their employees' lives, and ultimately, their deaths. In essence, banks make a profit when their employees die, and they do it tax-free. The question that arises is this practice ethical? A query that echoes in the minds of many when they learn about bank-owned life insurance, or BOLI. As we delve deeper into the labyrinth of this practice, we find ourselves entangled in a web of ethical quandaries. On one hand, critics argue that it feels unsettlingly akin to wagering on death, a morbid gamble where the house always wins. They question the morality of profiting from the demise of others, even if the deceased are no longer with the bank. On the other hand, some believe it's a necessary evil. They argue that these policies allow banks to hedge against future liabilities, providing a safety net in uncertain economic times. A buffer that, in their view, justifies the means. The ethical debate rages on, a whirlwind of differing perspectives and moral standpoints. Yet, one stark reality persists, casting a long shadow over the discourse. The ethical debate continues, but the fact remains, banks do profit from death. So, what should one make of this unsettling reality? It's clear that the world of banking isn't as straightforward as we might think. We've delved into the disquieting truths about banks and their practice of bank-owned life insurance, or BOLI, a process that capitalizes on the death of their employees. We've unraveled the mechanics of how this works, and the ethical dilemmas it poses, and it's something that can leave a bitter taste in the mouth. This information may be disturbing, but it's vital to be aware. We encourage you to delve deeper, to do your own research into the practices of the financial institutions that you entrust your money with. Don't just accept the glossy facade presented to you. Ask questions, dig deeper. The world of finance is complex, and understanding it can be a challenge, but it's a challenge worth taking. Stay informed, stay vigilant, and remember, knowledge is power.